always tough to follow Bruce, so I'll try my best. As Nick mentioned, first of all, we're a publicly traded company on the TSX. V.OGI is our symbol. Here's our standard disclaimer policy. So to give you a perspective of who we are as a company, as a glance, we're one of the first group of 13 companies in 2014 that was licensed for medical space in Canada. We are really the only company that has continued to focus and build out on indoor production, whereas really the bulk of others with any scale have focused on greenhouse production. Our current capacity is about 36,000 kilos a year, with our projected capacity by the end of this year to be 113,000 kilos or 113 million grams. We reported our Q1 fiscal 19 on Monday of this week, which was our first quarter of adult recreational sales. And with our low cost, which I'll get into in a few minutes, we had a positive EBITDA and strong cash flow. And we're looking at a lot of market opportunities. Just two quick highlights on the investor slide here is that, when you look from a perspective, as I said, our revenue in the quarter was $12.4 million. That first quarter of rec was more than our entire year of medical sales the previous year. And as a company, we're in a strong cash position with $96 million of cash. So I mentioned our cultivation costs, and I've got a slide that'll highlight this. One of the key things for us is we have the best margin in the space at a 71% margin with the lowest cost of goods at 56 cents per gram on a cash basis. Our adjusted EBITDA margin was $5 million or 40% as well. So just this slide just highlights kind of our production costs. One of the ways we've been able to drive our costs down is by improving our yields over time. Having an indoor facility allows you to do that in a consistent manner, and that's been a big part of our success. We have a culture of continuous improvement, and everything we're doing is about driving high quality product. But as a secondary benefit to that, we've been able to reduce costs significantly. You see in our last quarter, our cash costs were at 56 cents a gram, and our combined costs were at 74 cents a gram. So again, the lowest reported in the industry of any publicly traded company. We're based in Moncton, New Brunswick, and as Bruce was alluding to earlier, certainly New Brunswick is a leader in the recreational space, was really the first province to announce agreements for supply and has been very, very aggressive in building out retail locations across the province. There's a big benefit for us being in Moncton. We've got a skilled work set. It's a big manufacturing community. And also we've got a very low power cost, which as an indoor producer is a big advantage for us. We've got deals nationally in every single province with the exception of Quebec at this point. We are targeting Quebec and hope to be in Quebec later this year. So it really makes us one of the kind of coast-to-coast players on the adult recreational market perspective. Very strong position in Atlantic Canada. So just before Christmas, for example, BNN Bloomberg published an article which referenced that we had roughly a 25% share in Atlantic Canada, which is a big advantage in terms of our home base, but we've got a strong position across all of Canada at this point. We are working internationally, so we've got an agreement with a German company called Alpha Cannabis, which is currently selling a synthetic CBD within the European market. They've applied for license through the tendering process, which we expect to hear results in April of this year. And then we've got an agreement with a CSE traded company called Eviana, which is producing CBD from hemp. And that's a big part of our strategy going forward is CBD in terms of the marketplace. One of the more interesting investments we have is a biosynthesis company called Hyacinth. So for those of you that don't know biosynthesis, it is how half the world's insulin is produced. So basically using yeast fermentation where you've genetically modified the yeast by having it produce a protein. And in this case, it's producing a precursor molecule to CBG, CBD, and THC, and then using proprietary enzymes, converting that into one of those cannabinoids. They're also working now on minor cannabinoids, and this has the potential to be a disruptive technology to the entire industry for production, not only for edible products, vaporizable products, but also as an active pharmaceutical ingredient for pharmaceutical products going forward. One of the things that makes us unique is we have a 3-level growing facility, and I'm actually going to show a video now which will give you some insight into that. Allows us to maximize what we do operationally. So, I think you never get a sense of kind of what a company's doing until you can tour it or visit it. And one of the reasons we always like to show the videos, you really get a sense of what we're doing. One of the things you saw there is really the premium products that we're producing on a kind of day-to-day basis. And, our premise has been, as I said, that we're focused on premium indoor quality products, but we've been able to do it at the lowest cost in the market of any publicly reporting company. So it's been a big advantage to us. So I'm just cognizant of time. I'm just going to finish up with, leave it on this last slide, which kind of shows our adult recreational portfolio, and I'll see if there's any questions. No? Okay. We're good then. Okay, thanks everybody. Appreciate your attention today.